Fed is about 4 interest rate increases using the projections released today away from what might be considered a neutral Fed funds rate. And I wanted to ask how you're thinking about what to do once you get to neutral. Under what conditions would you decide once you get there that it's okay to stop raising rates? And under what conditions would you want to keep going?
So for many, many years, we've been far from maximum employment and stable prices, and so the need for accommodative policy has been clear. As the economy has strengthened and as we've gradually raised interest rates, the question comes into view of how much longer will you need to be accommodative, and how will you know? How will you know where, at what point, policy will be neutral? Neutral meaning that interest rates are neither pushing the economy up nor trying to restrain it. So we know that we're getting closer to that neutral level. We don't have an exact sense of how that will be. So the committee is discussing very actively the questions that you raise. And really, it boils down to a question of what is appropriate policy. And, you ask, how will we know? So I think we'll be very carefully looking at incoming data on inflation, on financial readings, and on the labor market. We have to acknowledge that there are always wide uncertainty bands around the level of, for example, the natural rate of unemployment, but also what is the neutral rate of interest? What is that rate of interest that pushes neither up nor down? So I think we'll be guided by incoming data on the economy and try to keep our minds open as we move forward.
Howard and then Sam.
Hi, I'm sorry. Howard Schneider with Reuters. 2.1% above target for 2.5 years starts to feel like some of the alternate frameworks that have been discussed here, be it price level targeting or trying to set expectations higher so that you hit your 2. In deciding how symmetric is too symmetric, what sort of parameters are you using on that front?
Our target for our medium-term objective for inflation is 2% PCE inflation. We feel that target has served the economy well, and I'm strongly committed to it. The committee is strongly committed to it. The sort of barriers to making a material change to that would be very high because, again, we think it's fundamental and we think it's worked. You ask about price level targeting and that sort of thing. There are some ideas that sort of take cognizance of the fact that rates are lower. We're near the zero lower bound, and that could put downward pressure on inflation expectations if we're going to be down at the zero lower bound, and therefore sort of undermine the credibility of the 2% inflation objective. So the idea is to have kind of a makeup. If you're below target for a while, you have a time of being above target, and the idea is to enhance the credibility of that 2% target. This is an idea that's been written about for many years. It's not something that the committee has looked at seriously. I imagine we will be having discussions about it, but not something that we have on the calendar right now.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.